Okay. Thank you all so much for joining us today. My name is Rebecca. I'm with Aarp Elderwatch, and we are a 20-year partnership with the Colorado Attorney General's Office doing education and outreach across Colorado. Presentations like this, and then we've also been back in the community doing in-person presentations, which has been very fun. We have a volunteer staffed fraud victim support helpline. So if someone you know is a victim of a fraud or scam, or just has questions about the legitimacy or something, we are happy to help. We also have a peer-to-peer financial counseling program. We're happy to pair you up with a trained volunteer in caregiving finances after the loss of a loved one, or just typical budgeting and savings assistance. You can give us a call at 800-222-4444, option number 2. And thanks for joining today. This is an interactive workshop, so feel free to keep your camera on. But if you do have your camera on, you will show up in the recording. So if you don't want to show up in the recording, don't put your camera on. Feel free to type questions in the chat. We will get to them throughout. And then if you'd like to speak, just use that raise hand button. Finally, this is not financial advice, so be sure to consult with a lawyer or certified financial planner or debt counselor before making any final decisions. And this is all about smart and safe investing. So today we are going to start off with investing in stocks, which is probably the most common way we think about people making investments. And so the way we invest in stocks is, first you have to decide how to invest. Choose your stock and stock fund on your own. That is a option, right? You can do all the investing and managing of those stocks on your own. Have an expert manage the process for you. So hiring a stockbroker to do that work, or start investing in an already existing fund as a workplace retirement fund. So what funds are available to you to invest already? Then you want to choose an account. So you can open an online brokerage account. Some of these have slight fees for managing that account. Some of them are completely free, but if they are free, just be sure to take precaution with what data you are giving them, because if it's free, that means you are the product. So you can also use apps such as Acorns or Robinhood. These have become more and more popular. They are known as micro investing apps. You can put in a minimum of $1 and invest that into an Apple stock and own just a tiny fraction of an Apple stock through those apps. So those have risen in popularity. Or you can open a robo-advisor account. So that is a robot just making those decisions for you based on the math. Invest in a single stock by buying shares from a public company, and this can be a higher risk than investing in a stock fund. But also be sure to set a budget for your investment. So think about how much money you have to invest, how much you are able to lose, and this is really important, how much you're able to lose, right? You want to make sure you're not going to lose more money than you're putting in. And that is hard to do, especially when the stock market is volatile, like we're saying right now. But just be sure that you're not, putting in your whole life savings into the stock market and hoping that that's going to have a super high return on investment, because we never know what's going to happen. And then also take into consideration what you are investing for. That might put a different timeline on your investment than, let's say, I don't know, going on vacation next year versus buying a house. Investing in index funds are going to look slightly different because these are investments that are made up of stocks that mirror the company's and performance of a market index. So the most popular example probably is the S&P 500. This is very passively managed. So you put that money in and then it basically just sits there for a long time. And they usually have lower fees because, again, it's just passively managed, but they often also have higher returns. You do have to take into consideration how long it's going to take for those higher returns to come about. And be sure to pick your index by evaluating the company size and how much capital they have. So how much of a profit are they actually earning? Geography, right? Where in the world are they located? Are they in the United States? Are they in a place that is seeing volatility and not a stable economy? What business sector, what industry are they in? Is it a profitable industry? Is it an industry that's failing? What kind of asset is that index? Is it a domestic or foreign bond? Is it cash or is it a commodity? And then what are the market opportunities for selling off that index fund? So once you select a fund, you do want to consider the costs that are going to be associated with that fund. There's likely going to be both an investment minimum and an account minimum, and then the expense ratio. So how much money are you putting in? And then based on those expenses, how much are you going to get out? And then the tax cost ratio. So you want to make sure that your investment is not going to make so much money that you're going to be paying more taxes when you pull that investment out than you would actually make a profit. And then you're going to want to decide where to buy. So what selections of funds do you want? Who is convenient to manage your investments? How much are the trading costs associated with such investments? What kind of impact do you want your investment to make? So for example, some people are trying to only investing in companies that are green, right? Or carbon neutral. And that's the impact. They're trying to go for the environmental impact of making those investments. And then what are the options for the reinvestments? What do those look like? And are they truly free? Investing for retirement might look a little bit different because you really want to have your budget honed in when you're going to be investing for retirement. Set up automatic savings if that is something that you're able to do. Eliminate any excess expenses. So maybe that means meal planning or shopping in bulk or discount, and then putting the extra savings into a retirement fund. Calculate a realistic savings goal based on how long you think you need to save. And then the next one is probably one of the most important: pay down that debt. So if you have lots of debt, start the smallest amount first, pay that down, and then work your way up, snowball that debt until it's all gone. Also, you can set up automatic investments, and this takes advantage of dollar cost averaging, which is the amount of money that is invested regardless of the price that that stock is. So basically free money. Mix your investments also. So various financial experts and advisors say different things on mixing your investments. 60% in stocks is going to be aggressive, but it's probably going to give you a higher rate of return as opposed to putting it all in an ETF. So also be sure to maximize any contributions to workplace retirement plans, 401k, free money, and Roth IRAs as well. Roth IRA, you can contribute once a year, you can contribute a lump sum. And after you turn, I think, 55, you are able to contribute catch-up payments. So if that's an option and you're able to do that, contribute that extra amount of money until you have to pull out the IRA money. Also, look for a side gig if that is a possibility, or consider found money or downsizing. And be sure to have a plan for emergencies set into place. If you can work longer and put more money into that 401k, that is also going to be more free money. So variable annuities are the most common. Sorry. Okay. Sorry about that. Can everyone hear me? Okay. So a variable annuity is the most common annuity that we see. And these are not investments. They are a contract between you and an insurance agency. This serves as an investment account. So not an investment, just the kind of account. This does have some insurance features, and it's tax deferred. There are a range of options on annuities and for making payments, but annuities do not work to meet short-term goals because they are a long-term savings mechanism. Variable annuities also let you receive periodic income payments for a specific period or the rest of your life, the life of your spouse. But before purchasing, understand exactly how that annuity is going to work. Ask all the questions you have. The people that are working for the insurance agency are there to answer those questions. Figure out exactly how much that annuity is going to cost in the long term and fully understand the contract you are signing before you sign it. Okay, now everyone's favorite topic, I know, cryptocurrencies. So these are digital assets that are created using computer network software that enables secure trading and ownership. So basically, there's a big ledger known as the blockchain, and it has a record of transactions, keeping track of who owns what in the blockchain. These public blockchains are decentralized, which means they operate without a central authority, so there's no bank running them or government running them. The most popular cryptocurrency we hear about is Bitcoin. Bitcoin is incredibly volatile, so its price goes up and down and up and down. Its worth changes literally from minute to minute. Bitcoin investments and cryptocurrency investments in general can be made on a variety of different websites or through a Bitcoin wallet. And usually the wallet or cryptocurrency wallets have passwords. If the password is lost, money gone. So if this is a method that you think you want to invest in, be sure that you put that password somewhere. You're not going to lose it. There are hundreds of stories of people losing literally billions of dollars because they can't find their Bitcoin or cryptocurrency wallet passwords. Bitcoin ATMs have also been popping up everywhere. You actually can probably spot these in the grocery store. They kind of look like those like coin counting machines. I don't know, I used to go to the grocery store when I was a kid and dump all the coins into the machine and then would count it up and give you cash. So they kind of look like that, but they're actually Bitcoin ATMs. So this allows a user to deposit cash to pay for Bitcoin and also pull out Bitcoin if necessary. And it's a way that scammers are getting people to pay for scams and be victims of scams. That is a new way that we haven't seen quite before. Non-fungible tokens are non-interchangeable units of data that are stored on that ledger, that blockchain, that can be sold and traded. So types of NFT data units may be associated with digital files, such as photos, videos, and audio. NFTs cannot be replaced within the blockchain, but digital files can be replicated. So if someone owns an NFT, yes, they own it in the blockchain, but that digital file can appear over and over and over and over again on the internet without anyone really having ownership over it, except for within the blockchain. Okay, so there are quite a few questions that you want to ask before going ahead and purchasing any products. Is this product registered with the SEC or the Colorado Division of Securities? Does this investment match your investment goals? Is it suitable for you? And how does this investment make you money? Is that a dividend? Do you get interest? Do you get capital gains from that investment? What could cause the investment to decrease in value? There could be quite a few factors for that. What are the total fees associated with purchasing, maintaining, and selling this investment? Are there ways to reduce the fees associated with maintaining the investment? How much does the investment have to increase in value to cover the fees and break even? How liquid is this investment? So how fast can you turn that investment into cash? What are the risks associated with having it? Is the company making money? Very important question. You can go ahead and invest in Twitter, but Twitter has never turned a profit. How long has it been in business? And is company leadership experienced? Lastly, where can you find more information about the investment that is as unbiased as possible? So questions to ask about ETFs and mutual funds. How has this fund performed for the long term? Is there independent evaluation of this fund? So who is behind saying that this fund has money in it? And is that person working for the agency that has the fund, or are they outside of that organization? What are the specific risks associated with the fund? What types of securities does the fund hold? How often does this portfolio change? So if it's changing over and over and over again from month to month, that's probably going to be a bit more volatile than something that never changes. Does this fund invest in any type of securities that can make it especially volatile? That's going to be very important as well. How does the fund perform compared to other funds of the same type? So this is comparing funds side to side that look exactly the same and making sure you understand fully how that fund performs comparatively. So it's kind of like looking at, I don't know, the ratings on different lawnmowers, but for ETFs and mutual funds. How much does the fund charge to buy shares? What are those ongoing fees? And then how much will the fund charge when the shares are sold? And then the last one, you're going to want to make sure that fund is portable. Otherwise, if you want to move it or change it, you might get into a bit of a sticky situation. So being sure that you fully understand the capabilities you have with portability with that fund is going to be essential. Questions to ask your sellers. And this is going to be important in safeguarding you against scams. Are you registered with the Colorado Division of Securities? If they say no, that is when you can stop doing business with them. Have you ever had a disciplinary action against you by the SEC, state regulators, an organization like FINRA, or one of the stock exchanges? If they have them explain what the disciplinary action was, what the outcome was, and then evaluate if that's someone you want to do business with. How long has your firm been in business, and how many arbitration awards have been filed against your firm? What training and experience do you have? How long have you been in this line of work? What other firms have you been registered with, and what is the status of those firms today? And once you know the answers to some of those questions, you can do more research about those other firms and the brokers work at other firms, and then decide if you want to continue working with them. Have you personally been involved in any arbitration cases? And if yes, can you elaborate? What is your investment philosophy? And this is going to be a great question to ask. Does your philosophy and the seller's philosophy, do you see eye to eye? Do you have just stark differences? This is going to be really important in making sure that they have your best values in your best interest. Describe your typical client. Do you mind providing names and numbers of your long-term clients? If they're not able to give you people to call for references, that should be a red flag. A few more questions to ask sellers. How do you get paid? Are there choices in payment method? Is it a flat fee or per transaction? And this is going to be an important question to ask because that might make a difference as to how you potentially are also paying for your investments. Is your recommendation the same for this stock, bond, mutual fund, or ETF, whether or not you make a profit from it? And that is also going to be a huge question to ask, because if their recommendation is going to change based on whether or not they're making a profit, is it really in your best interest? And then the last question, is this purchase truly in my best interest? And if they're not able to answer that question truthfully for you, that may be, again, a red flag. Questions to ask about the progress of your investment. How frequently will I get statements regarding this investment? Do I understand the statement? And if I don't understand the statement, how can I get assistance understanding that statement? Is the return on investment meeting my goals? Is it performing as I was told it would? How much money would I get back if I sell my investment today? And that might change day to day. How much am I paying in commission or fees? Have my goals changed? And with my goals, do my investments need to change as well? And then lastly, what criteria will I use to decide when to sell? Are you holding the line till you can't hold it anymore? Is it one tiny dip in the stock market? Is it just a, time-bound goal? That is going to be an important question to evaluate when looking at investments. So a few tips for problem solving with investments and investors. Act quickly. By law, there's only a limited amount of time to take legal action. So have a paper trail, get things reported as soon as you possibly can. Talk to your investment professional, explain the problem. Where is the fault? Were they clear in their communication? And what exactly did the investment professional tell you? If your investment professional cannot resolve your problem, try talking to their supervisor. And if that does not work, write to the compliance department at the firm's main office and explain the problem clearly, what your ideal resolution will be, and that you would like a response within 30 days. If you continue to have problems, send a copy of your letter to the Colorado Securities and Exchange Securities Division and the Office of Investor Education and Advocacy at the Securities and Exchange Commission. You can also contact FINRA, the Financial Investor, they do investment regulations to report it to them as well. 844-574-3577. And then spotting a scam. So investment scams can have these very long-lasting and far-reaching consequences, but discharge absolves of debt through the court. So it will not show on your credit report unless there's bankruptcy, and then that will stay on your credit report for 10 years. Chapter 7 bankruptcy involves liquidating all assets, and Chapter 13 allows people with a steady income to keep property. Filing fees for legal action can be several hundreds of dollars, and both types of bankruptcy gets rid of unsecured debts. Stops foreclosures, repossessions, garnishments, utility shutoffs, and debt collection activities. But there also must be credit counseling from a government-approved organization within 6 months before any bankruptcy relief can be filed. So be really sure when you are deciding to invest that this is a legitimate investment. You're working on a legitimate website if it is online, especially with these cryptocurrency investments. There's no regulation, none at all whatsoever. The transactions in the blockchain are anonymous, so it's very hard to trace when your money's lost. So just be very, very, very careful. If someone approaches you on Instagram and they have this brilliant investment opportunity for you, but you've never talked about investing on Instagram, that should be a red flag. Why are they approaching you when they don't know anything about you? Why is a stranger coming to you with an investment opportunity? Is that an investment opportunity that is really going to be in your best interest? And then please feel free to put questions in the chat. If you have questions, I'm happy to answer those. Some resources: the Securities and Exchange Commission, SEC, has a great website, investor.gov, tons of information and resources on investing. The Commodity and Futures Trading Commission, CFTC.gov, there's places to report there. There's also information on various investments. The FBI's Internet Crime Complaint Center. If something happens to you online, and if an investment scheme happens to you online, report it to IC3.gov. FINRA, again, they regulate investment brokers, so you can visit their page if you're having issues with brokers or you have questions. Colorado Division of Securities, securities.colorado.gov. Give us a call, Aarp Elderwatch, at 800-222-4444, option number 2. And then AARP has a plethora of resources on their money investing website, aarp.org/money. Okay. I'm not seeing any questions, so I will let you, thank you very much. I will let you all have your 3 minutes back of your Wednesday. Stay scan safe. This presentation will be on AARP Colorado's YouTube channel shortly, so if you want to share with friends or family, feel free. Thanks so much, everyone.